Joining us for more on community banks is Neil McCurry, President and CEO of Sable Palm Bank, and Sean Merriman, President and CEO of Gateway Bank of Southwest Florida. Thank you both for being here tonight.
Thank you.
Glad to be here.
Let's start with, as simply as you can, because banking is such a complicated issue, explaining to the public, we saw what happened with the big banks, and that is why Dodd-Frank was imposed, so the same thing can't happen again. Why are the regulations that many would argue are a good idea for the big banks not problematic for community banks?
Well, I'll go ahead and start. One of the biggest issues with Dodd-Frank is that it was a big, broad brush for all banks, and unfortunately,
and it didn't make a difference between the big banks and community banks.
It really didn't, and I think as history has now determined, it wasn't the small community banks that caused the issues in the banking crisis, the most recent banking crisis. It really was the larger banks, a lot of the Wall Street firms, mortgage issues, and unfortunately, because community banks are challenged to raise capital from time to time when they need it and being privately held, it really put a burden on us for a variety of reasons. We don't make as much money as we used to. We have more compliance officers than we've ever had, and it just has made our life a little bit more challenging in that you have to hold more capital, you're making less money, and as investors, it's not as good of a return to investors. It can be challenging from time to raise capital.
Still, the Wall Street Journal has pointed out that just last year, earnings rose 9.7 industry-wide, 7.5 according to the FDIC. Community banks portfolios grew 8.6% versus 6.4% for the entire industry, including the big banks.
Yeah, well, I think community banks continue, no matter what the regulatory environment is, to be successful going out and serving the needs of the community and the businesses, the entrepreneurs. And I think Sean's bank, our banks, the other community banks in the area have all been successful in growing their institutions. But it's certainly we're operating a very challenging oversight right now, which has a significant amount of cost to it, and thus causes pressures on your profitability, making it more challenging in raising new capital.
Now, those were the numbers I cited nationwide that the Wall Street Journal looked at, but are there particular factors unique to community banks in Florida?
I would say absolutely. When you go back and you look at what's happened in the state of Florida over like a 40-year window, in the 70s we had as many as 800 community banks headquartered in Florida. Today we have less than 136. And what happens is we have 300 banks in total in the state. So the competitive pressures from the large super regional banks is intense. I would have to say, and I think Neil would agree, we have more competition in the state of Florida than probably anywhere in the entire country because we have that wealth factor, we have the demographic, we have population growth happening. So it does put pressure on community banks because we're competing with the likes of the Bank of the Americas, the Wells Fargo, et cetera. So unlike some places like in the great state of North Dakota, for example, 83% of the banks in that state are owned locally. Down here in Florida, it's less than 45%. So you can see that the amount of out-of-state banks competing here is intense.
But wouldn't that also be true in states like New York to California or larger metropolitan areas?
Yeah. Yeah, well, there's certainly plenty of competition, but the truth is that's not new. It's always been very competitive around here. And I, again, will say, banks like Sean's continue to be successful in a very competitive market. I think our challenge is we have interest rate challenges. Interest rates were lower when the recession came upon us, and while the recession is by and large gone, we're still struggling with low interest rates as an industry, and we have increased regulatory costs. So we have a lot of factors that we didn't face in years past, and on top of always being very competitive.
Obviously, the lower interest rates are good for people who are trying to buy homes, not good for the banks or the people who depend on bonds to make their incomes.
Well, we have a big retiree community, and quite a few of them live on fixed incomes and Social Security and what they might earn on their deposits, and they don't want to put money in the stock markets, and historically they've used certificates of deposits as a portion of their income, and they took a pay cut 10 years ago and they haven't recovered from it.
Right. Let me talk a little bit about home loans and foreclosures and whether that particularly has impacted community banks in Florida and is there a difference between how it has impacted community banks and the larger banks?
It really hasn't negatively impacted I think, our community banks, because the small community banks typically focus on small to medium-sized business loans. Mortgage banking in my bank is a relatively small percentage. It's about 22 to 25% of my business. So although it's important and we make mortgage loans, it's the commercial side of the bank that really drives the earnings for most community banks.
But Neil, we have talked before about the continuing problems of foreclosures in Florida. We still lead the nation, I believe, and whereas the housing market has improved, there are still a great deal of people here on the Sun Coast and in other parts of Florida who are still struggling in this economy.
Yeah, there's two sides to that coin. On one hand, we lead foreclosures for the whole country, but foreclosures are down dramatically from years past, which is great news. Price values, home values have gone up, which has helped a lot of homeowners that had negative equity in their home and couldn't sell in the past. Now they could. But there are challenges. Regulations makes it harder to get a mortgage, and prices have continued to go up, making home ownership more expensive in this area. So it's tough, and you know the local area economy overall has done well, but it's an uneven recovery. We're certainly seeing that not everybody's is enjoying increased wages and earnings, and it's having a real challenge on a lot of the people in our community.
So what would both of you ask our esteemed members of the United States Congress in terms of making changes to Dodd-Frank that would not impact the understandable new regulations on some of the bigger banks, which are to blame for the financial collapse, but ease off pressure on smaller community banks who, as you say, are not responsible for what happened? And in addition to that, I know this is kind of long, do you think that the political environment makes it difficult for Congress to do anything about it?
Well, the challenge is you know, Dodd-Frank's original purpose, big picture, was that banks were too big, and they were concerned about that. And certainly what's happened since then is the biggest banks have gotten even bigger. We were talking before the show that how many of the banks, a dozen of the banks control 60% of the deposits in the country, and so, which is a big increase over years past. So I think the primary emphasis of Dodd-Frank really hasn't come to fruition, but a lot of the regulations imposed on us has. I think our challenge is that the end of our name has the word bank, and the biggest banks in the country have the word bank, and we're painted with the same brush. And I would hope that regulators and politicians would truly look at us as two different industries, and spend time learning about what Sean and our bank and other community banks do every day to help our community, and why we should be treated completely separate than larger institutions.
And we'll have to leave it there. Gentlemen, thank you so much for joining us.
Our pleasure.